Hey guys, today is officially pre-CPI day. Tomorrow we will get our CPI reading. Um, that will happen at 8:30 a.m. So as of right now, based on the Bloomberg numbers, Cleveland Fed numbers, and consensus, we are setting up for a potential repeat of the extremely bullish November CPI data that we got. So what I'm looking at here is a potential year-over-year CPI range of 2.7 to 3.2%. Previous was 3.4%. So either way, we're going to beat. CPI month over month is 0 to 0.3%. Previous was 0.3%. So even worst case scenario, it's unchanged. Now, core year over year, we are looking at a 3.6 to 3.9%, and previous was 3.9%. So same thing here. Either way, we're looking at an unchanged at the worst case scenario. Now, core month over month almost always has the same 0.1 to 0.5 range, and previous was 0.3, and it's just kind of stuck there for a couple months now, so I'm not worried about too much there. So my current prediction is a year over year of 2.9%, a month over month of 0.2%, core of 3.8%, and core month over month of 0.3%. Now, I want to talk about why this is such an incredibly bullish projected numbers right now. So if we look at CPI year over year, we have basically been steadily decreasing since our top. So what I mean by that is, back in October, we had our peak of CPI and whatnot. Of course, obviously 2022 is what I mean. If we get this 2.9% reading, and I feel pretty solid about that 2.9%, that will be the lowest reading that CPI year over year has had since April 13th of 2021, which came in at 2.6%. Now, even the worst case scenario that I think we get 3% CPI year over year, that matches the July 12th, 2023 low. So again, that is in and of itself extremely bullish. But I do believe, one, we're going to get a massive 0.5% drop in year over year CPI, which is the first time we've had that big of a drop since the October into November CPI, which remember was a massive, massive pump. So again, that is very, very bullish. Now let's go over to core year over year. Projected and assuming most likely we get at least below 3.9%. So either 3.7 or 3.8%. As of right now, Bloomberg and consensus say 3.7. I feel pretty good about that too. This would be the lowest reading, depending on where we come in at, since June 10th of 2021, if it comes in at 3.8%, or May 12th, 2021, if we come in at 3.7% or lower. Now, the thing that I think is going to be really, really important to think about here is that core has been steadily, since its 6.6% high on October 13th, 2022, outside of one reading, it has been winding steadily. If we can show another decrease in that core, and CPI year over year can come in at that 2.9% area, using Jay Powell's words himself, I think that is going to give the Fed the confidence they want and they need in order to cut rates. As of right now, midday when I wrote this and I started doing my research, there is a 15.5% chance of a March rate cut and a 49.6% chance of a May rate cut. Pricing in six rate cuts right now. I am willing to bet almost that if we get a 2.9%, because it's going to be a 2 and everybody's going to freak out because it says 2 in front of it, and core comes in lower, we are probably going to see a massive move up in the expected March rate cut, and most likely price in an additional 7th rate cut. I think markets are going to take this and they are going to absolutely go crazy and they're going to run with this. So let's go to the market here. You know, that all comes out at 8:30 tomorrow. It'll be interesting to see how the market actually reacts. I am pretty bullish, and I do think we're going to get a nice kind of bullish push. So, you know, looking at this here, and this is what I was looking at just drawing right now. You know, if you take this, let's see, right here and right here. So you look at this nice channel up we have. Now, it does pretty closely ride with this other channel that we have here, but you can see it's just a little bit more steep. So let's go ahead and make that a little bit different of a color so it's easier to see here. But you can see we have since January 3rd, just this massive move up. And you kind of see we kind of ebb and flow up and down, up and down. So today we did get a new supply at 501.29. We did get the doji double top. Now, generally speaking, in a normal market, kind of like you saw back here with the, you know, the doji kind of reversal, I would be pretty bearish. I would be saying, yeah, I bet we get a bad reading tomorrow, and I bet that we go down. I bet that this is going to come down to the 8 EMA support, which would probably be down in this kind of 498.1 area that we, from here, this kind of support and resistance. But I'm almost willing to bet that we get a big pump up and probably a gap up tomorrow. We might not actually get a gap up because in order to gap up, let's see, we would have to move up. I guess only 0.5%. It's probably probable that we will. So to the upside here, we have this red bull channel resistance. We got 506.33. So from today's close, that's about only about a 1% move. I think possibly we could even do a 2% move, which gets us up into this kind of 5-10 area here. So it'll be interesting to see if it plays out that way or not. Now, in the off chance that markets do not receive this CPI well, our support is going to be right here at this 497.6 to 498.3 area, which is where the daily 8 EMA support will be and likely where we would bounce at if we sold off. Going over to futures here, same thing. So we have this similar kind of bull channel that we've been running in here right there. So you can see same thing since about January 3rd. You know, we're just kind of riding up in it. So we got the double top doji reversal candle. 50.44 is our supply. Same thing. If we come lower, I like the 50.16 to 50.18 support area, which is where the 8 EMA likely will be. But again, if we push to the upside here, you know, oops, wrong one. If we push to the upside here, I like the potential to move up to at least 50.80, but I really think that, you know, if we get a 2% move here, I mean, we could be talking, you know, all the way up here in the 51.40 area. I would not be surprised to see us at least break through 5100 tomorrow, though. You know, somewhere maybe in this 5120 area, I think is extremely probable. And, you know, if you look at that white bull channel, this is what we've been in. It's kind of just a massive rising wedge here. And I think a good top would be some sort of blow off, which could certainly come, you know, tomorrow. So real quickly, we'll go back over to November. Let's see. That's not, there we go. Is this, I'm trying to see off the top of my hand here if I can remember where, oh, this is 2022. Let's see, November 2020. Yeah, it was November 2022. We had a massive CPI number. There it is right here. So I'm kind of thinking maybe something like this too, just where we, you know, you see how we had the reversal. This looks super bearish going into CPI day right here. And then you can see, boom, just straight all the way up. That was an incredible 5.5% day. I don't think we're going to obviously close that high or anything crazy like that, but I do think we're going to get a big day tomorrow. So let's go over to Qs here. Same thing. Nice supply here at 437.13. You know, same thing here. We kind of have that massive rising wedge that we've just been playing in now since, gosh, all the way back here on September 21st, 2023. So if we look at that and we're looking at the upside potential here, so, you know, our potential is all the way up here to this. It's 1.3%, 1.4%. So it's about 441.3 area, I think is very probable for Qs to hit tomorrow. Again, if I'm wrong and we come down, then our 8 EMA support is going to be right in this 432.1, all the way up here to this 433.2 area. I think this area right here is going to be strong support to watch. Now going back over to NQ, same thing. We got a new supply at 18,040. Same thing. We have our same bull channel. So if we look at our forecast here, if we go up, that's 2% right there. I think that's pretty probably the best case scenario. That's looking at 18,282 area. I think that's not out of the realm here. Now, same thing. If we come down, we got major support to watch at 17,855, and then really 17,701 is the next major support below that. One interesting thing that happened today was the VIX. VIX had a massive move up, 7.9%. One of the first gap ups that we have had since back here on January 12th to the 16th. I'm kind of surprised to see such a strong move up on the VIX today, especially based on just the numbers that we're seeing. Now, I suppose maybe people are kind of going worst case scenario here that, oh, CPI is too good. Now we need an emergency rate cut. I don't think that's going to happen by any means. But maybe people are starting to position themselves for the March FOMC that is coming up. This is not a bad time at all-time highs. If we do start to cut rates in March, historically that is when the top is put in. So, maybe people are starting to hedge. But one interesting thing up, since this was the biggest move up since January 31st, almost actually it was bigger than that day here. Really, this is the biggest VIX day since December 23rd. So you can see the next day was December 21st, and then this one right here was February 1st. So if we go to December 21st, let's see here. You can see the next day up, market moved up. And then this is a big one, I think, was the January 31st into February 1st. So we had that big down day with the VIX, ripping up and markets dropped. And then boom, next day, 1.31% move up. So I think, again, we're kind of setting up for this fake move to the downside, and then it's popping to the upside here. If we go look at the dollar is potentially bull flagging. So kind of like we had here, this consolidation before a move up. However, I will say we put in a new supply on Thursday into Friday at 104.14. Now we have this nice double supply resistance area at 104.14 to 104.44. If we can close back below, and this demand should be right about there, back below 104.018, then I think we're going to see a big drop to the downside. I would not be surprised that if CPI comes in as cool as I am expecting it to tomorrow, that we see a major breakdown. So you can kind of see the diamond pattern is playing out here. So this is that big old triangle that could break to the upside or it could break to the downside. So obviously if it breaks to the upside, it's a bull flag breaking out and we could target 105, and we're probably going to see a big drop in the markets. Or if the bull flag fails, which is what I'm looking for, we're going to come back down to this 103 area, and that really could propel the markets much, much higher. Now, going over the 10-year yield, same thing here. So we kind of got some goofy patterns here. We did get a new daily supply. So this 4.176 to 4.181% is just a major, major resistance area. You can see all the way back to January 19th, we have not been able to really punch through and hold, more importantly, over those levels. So if, again, CPI comes in cool and we're going to start pricing in more rate cuts, we're likely to see the 10-year take a pretty big hit to the downside, kind of like we did back here on the 29th to the 1st. So that would certainly open up the potential that if we can get back under really 4.1%, then we're probably going to be heading back to the 3s. However, if markets don't like the data for some reason, then we're finally going to break out of this double supply area and we're going to start ticking away at these other supplies all the way up to about 4.33%. Just one quick thing, because I think Bitcoin's interesting to watch right now in the weekly time frame. Bitcoin is on an absolute tear. If we break through 51K or 50.8K, we really could be looking at 61.5K in the near future on Bitcoin. So big old day on crypto right now. Crypto is absolutely ripping. That's another big reason I kind of think we're going to get a good number on CPI tomorrow too. That kind of speculative money's coming back in, so that, pretty bullish. We'll see what happens, but hope you guys had a good day today. And I will see you guys tomorrow after CPI.